Hi everyone, in the video last night I covered this local move to the downside and explained why the probabilities at the moment are higher to look for a bit of a bounce towards the upside where 86k is very interesting resistance. However, if you zoom out to a 4-hour time frame or a daily time frame, the probabilities from an Elliott wave point of view are higher to still take out this low, and that is something I will explain in this video. Now, it is important to note that you realize that different time frames can have different probabilities. What happens on a lower time frame can have bullish probabilities, look for a move up, while on a daily time frame, you can look for price to still take out the low, as represented by the polylines that you see on my chart as well. You can see that in some of the polylines, we actually do look for a bit of a move towards the upside, but then at a later stage, still another move to the downside to take out this low. So this is how different probabilities of different time frames can merge into bigger scenarios. Now let's then cover the Elliott wave scenario, starting actually with the local move to the downside, because this has an important impact on the probabilities of the scenarios that I'm going to show. So price overnight here for me, Central European time zone, took out this low and moved a little bit to the downside, creating a higher probability 5-wave impulsive move towards the downside. And what is nice to see is that you have a bit of a grind to start with, a quick move down over here, and now you start ranging again, right? A bit of a downwards range, which creates a typical impulsive structure. You have your wave 1, 2, then you have your move down, and then you create a bit of a 4, 5. So a mess in the beginning, quick move down, mess to end it with. And we also approach the 80k support. So here we have 80.3k to 81.1k, and just above this box, which actually is not included in my box, is this daily naked point of control at 81.250, which as you can see is not touched. Now we have to keep this structure in mind, right? Higher probability at the moment. This move to the downside is a 5-wave impulsive structure as price took out this low after this range here. Then we jump to the first higher time frame Elliott wave scenario. And these are scenarios that start their count from the all-time high, right? So this is a diagonal, and this is a leading diagonal. So basically you look for a leading diagonal, a 5-wave structure, followed by a corrective retracement, and then another move to the downside to take out this low. Now what you're looking at here in this leading diagonal is a leading diagonal where all of the waves are a 3-wave zigzag family structures. And currently we're then working on wave 5. I don't want to make it too difficult, but alternatively, this move over here is only wave 3. So you have a wave 1, right? Then you have a wave 2, then you get a wave 3, wave 4 and wave 5. In both cases though, you take out this low still, which is important, and then depending on the move up, we'll see what happens. So at the moment, to keep it simple, 1, 2, 3, 4, 4 preferably finished, look for wave 5 towards the downside. Now wave 5 has to be a zigzag family structure, and because of the local move to the downside, the probabilities here are higher. This is now a 5-wave structure. You look for a 3-wave up and another wave 5, or sorry, another 5-wave structure to the downside, creating a zigzag A, B, C, 5, 3, 5 to take the low. Now, if price bounces off the 80k support, moves to 86k, then the common target area for your wave is C, is the 1.236 to the 1 trend-based fib extension taken from the start to the end of A to the end of wave B. And the end of A is at the 80k support, the end of B then at the 86k support, and then the common target for your wave is C, A, B, C, is this area, which then also is in confluence with the support box here between 75.9k and 76.5k, which so far actually has not been touched. We decided, or at least price decided, to move to the upside just before touching that support. And in that support, we interestingly do have a weekly naked point of control at 76k, which generally are great support resistance areas. So you can see nice bit of confluence, target area of wave C together with the box over here, and it would still require a bit of a bounce to the upside as well. In the second scenario, we look for a double zigzag to the downside. So from the all-time high, we then have a wave A, B, C. In a wave W, running flat in a wave X and look for another ABC to the downside in a wave Y. Now the invalidation is taking out the high here at 88.8K, and locally you are then looking for an impulse to the downside, a 5-wave structure, create a 3-wave retracement, and another 5-wave move to the downside. Now in this scenario, if price does not find support at 80K and price trickles down to 76, of course, then the probabilities are higher. You are going to visit lower levels still because you still look for another bounce and then another move towards the downside. So the further this move down goes, the higher the chances for lower prices, basically. Now, this is a bullish scenario because after a WXY double zigzag, you look for price to take out the all-time high, WXY, and now you want to move towards the upside. Impulsive structures over here, 1, 2, 3, 4, 5, correction, and then eventually continuation. And then we have the bullish scenario, which has lower probabilities, and I'll explain why, but I'll also explain what needs to happen for those probabilities to increase. So here we have a finished WXY double zigzag, and we look for price to move towards the upside. The local high is then counted as a wave 1 or A. We're looking for a 2 or B and continuation up in a C or a 3. Common target for 2 or B is the blue box. That's where we are now, preferably ending after a 3A2 fib time, which is also where we are now. However, a wave 2 or B needs to be a 3-wave corrective structure. If we count this move to the downside as a 5-wave impulse, it means we need another 3-wave correction up and another leg down, because an impulse can never stand alone. It always needs a partner leg. So this would then be a zigzag, A, B, and a wave C. Now a wave C is commonly quite similar in size and time compared to your wave A. So if wave A is this deep already, right, and goes this low, you need quite a high retracement in B in order for your wave C to not take out this low at 76.5, right? We do have some additional resistance, of course, above 86K, which is around 87.2, so that would be an area of interest. But then, if wave A tests this support here, right, we're very close. Below this support, I don't have a lot of stuff left. If I open all of my folders, you can see it's quite dense here, but below, there's not a lot going on. So if wave A is already going to test this support, you get a B and then a C down. Where is C going to find support? It would preferably be this area, right? But if you test the support area for the second time, the probabilities are lower, it holds, right? The more often you test support or resistance, the lower the probabilities it actually holds. So it is not ideal. In an ideal scenario, you would have had a 5-wave wave A, 3-wave correction, and then your wave C ends at the support box, right? That would have been ideal, but that's of course not what we got. Now the probabilities for the bulls will then only change if you get a 5, a 3, another 5, which finds support, then get an impulse up, 5-wave move, a 3-wave retracement, and that is the moment we're going to look for price to take out this high with the potential of that high. So a lot needs to happen, right, before probabilities really change in favor. Another way is to count this structure as a 3-wave move. So you then have to count this here as your wave A, diagonal, wave B is this move up, and this move down is your wave C. Now this zigzag ABC is then a wave W, right? Because also price here took out the low. So this can't be the end of your correction. So this is then your W. And then you look for wave X and you still need another wave Y. So this is also going to take some time. Minimum retracement target for your wave X is a Fibonacci taken from the start to the end of W, 3A2 at 84.3K. And that's a minimum retracement target, right? And then after your X, you still need a wave Y to the downside as well. So after a WXY, which is going to take some time, and Y is finished, you then still, again, need an impulse up, 3-wave correction down, and that is the moment we're going to look for price to take out this high with the potential of taking those highs over here at 88.8K. So also in this case, a lot still needs to happen for the bulls to get the higher probabilities. It's not impossible. We just need to have a lot more information and give it a lot more time. Now, we also have some news this week, Tuesday, Thursday, Friday. These times are Central European time zone. Just make sure you trade safe as volatility can increase at those times. And if we then look at the probabilities and the polylines on the 4-hour time frame, probabilities are higher for the diagonal scenario or the WXY, in both cases leading to another low. It is the yellow polyline / the white polyline. And on the number 2 spot, we have the bullish scenario that I just covered. On the 1-hour time frame, the probabilities at the moment are higher that this structure to the downside is an impulsive move. 1, 2, 3, 4, 5, right? Almost approaching support as well. Would be nice if we work on a couple of 4, 5s and a bit of a grind. And then, of course, wait for signs of strength with the potential of a bounce moving to 86K, which is very interesting. Now, I generally hammer quite hard on looking for signs of strength and having a plan and not just trading based on emotion. And that's what I mean with signs of strength. What are you looking for to enter a position, right? I'm interested in a long, right? For transparency, I'm very interested in a long, but I'm not yet in a long, right? I want to see signs of strength according to the tools that I use. So what are you using? Do you want to see bullish market structure, right? Do you want to see bullish CVD divergences? Maybe you want to see RSI divergences. Maybe you want to see volume slowing down as price is ranging to the downside and volume moving up as price is moving up, right? It can be anything, a trend line break, resistance changing into support, just something that gives you the confidence to enter. And the reason why I generally hammer so much on having signs of strength, having a plan, and people maybe get sick about it, especially during live streams, not so much during videos as I rarely cover it in videos, but in live streams, is because having a clear plan, knowing your signs of strength will significantly increase your profits and your trading, right? And also your emotion. Because I have an area of support here, very interested in that area of support, but I'm not someone that snipes a high or a low. I had my resistance, but this was not where I shorted. I short later when the probabilities are in favor, right? We took out this low over here once again. We moved up with some more bearish CVDs and some other of my tools. Check, check, check. Cool. That is the area where I'm interested. Same over here, right? Price can, of course, do this. Got to be prepared. Now, I'm interested in long, but I want to see some of my signs of strength, right? So make sure you have a plan, you have a strategy, and then you can execute on it. On the number 2 spot, we then have price just moving straight to the downside without any bounce, taking out the low at 76K. At the moment, lower probabilities, but it is important to at least be prepared. Keep an eye on the support that we have to the downside and look for your signs of strength. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.